Who was
How's
on
everybody
Clubhouse?
doing today? Yeah, we were on Clubhouse. We were planning for the day, getting some deals closed, and now we are here for damage control. All right, you guys cooking. So, Anthony, introduce yourself, the show, and then we'll get crack-a-lacking.
All right, man. Anthony Angelillo, branch manager at Paramount Residential Mortgage Group over here in Miami Shores. CEO, founder of Tag Team Nation, marketing company, e-commerce company as well. Top originator of Miami Agent Magazine and top originator in Scotsman Guide. Those of you that do not know who I am, I do lending, and we're going to talk about what we do in the back and behind the scenes during this episode. Very interesting stuff, and sometimes it's chaotic, but that's what makes our job so interesting.
Chaotic.
Oh, yeah. Whew, it's one of those mornings.
That's an understatement. That's an understatement. But we'll talk about it. Hi, guys. Melinda Grimaldi, real estate and title attorney. And so the purpose of today is to talk to you a little bit about what we and our teams do behind the scenes and why, because we feel there's a lot of misconceptions about a lot of things. If you're a newer agent, you may not know exactly and maybe feel too afraid to ask. But today is the day, guys, to ask those questions. So we're going to talk about bits and pieces of the process today, but I want you guys, there's the chat, you could do a private question, there's a Q&A function. So today is the day to ask those questions that you might have been wondering, whether you're first deal or 100 deals. Sometimes those things that we just kind of roll with it, but we don't really know why things are being done a certain way or how things are being dealt with behind the scenes to understand the process. We just kind of roll with it, right? So don't be afraid to ask. Today is the day. And if you're catching this on the replay, which I know we have a lot of people that do that as well, if there's another question that we didn't hit, don't be afraid to email us, DM us, and we're happy to walk you through that as well. All right. So first and foremost,
do me a favor. Look at the poll that we have right now. We gotta talk about this real quick. Do you have effective communication between all parties? There's 100%. I mean, okay. Is that?
But only 13 people responded so far, so we're waiting on that.
14.
Does everyone know what the next steps in the process are? Yes. Yeah. Okay. Well, they're still coming in there. So do you alert lenders, title agents when there are any changes to the contract or closing date? Always no. I feel like that's not real life, what's happening here, but that's okay.
Yes, I gotta humbly disagree with the communication between all parties, man. Come on. I see there's miscommunication with a lot of ends, but I mean, we just talked about that actually in Clubhouse, but okay. All right.
Let's get crack-a-lacking. Anthony, I'm going to guide you through like the list of things, the questions that I want you to, or the questions I've seen or the misunderstandings I've seen. I kind of created a list for us to go through today. Yeah. So it's not going to be like a chronological of events. I'm going to try to keep them in the order of that, what they happen. But one thing I want you to talk about is the difference. I know this is like elementary, but I feel like a lot of people don't understand. So I want you to explain the difference between a bank, a lender, and a broker, a mortgage broker. It's simple enough, but I don't think people always realize, like, we know the difference. So go ahead. And how that implicates on the deal, of course.
I mean, it doesn't, I don't want to bash brokers. I don't think it really implements anything.
No, it's about the process, the process.
So, I mean, bottom line is that we're a nationwide direct lender, Paramount Residential Mortgage Group. So the difference is we sell straight to Fannie, Freddie, and Ginnie. Okay, so there's no middleman, and basically we're selling that mortgage-backed security to that secondary market. That's the difference between a direct lender, okay?
So that means you're using your company's money.
Own warehouse, yeah, our funds.
You're funding with your own money. Mm-hmm. That's the difference between a lender, a direct lender, which PRMG is, and a broker. A broker shops around and finds lenders that also have a wholesale side, right? PRMG also has a wholesale side. So they go and they find a wholesale lender to then, so that they can fund the loan. So they
Correct.
got to find, they piecemeal, like, and then they give it to the underwriter at that other company. They don't have their own underwriters, right?
Correct. Correct. Very, very well put. So that's exactly what it is. And difference between a bank is, you get a credit union, they're usually portfolio, it depends. So he who holds the gold makes their own set of guidelines and rules. Regions, TD, Fifth Third, those are types of banks that are going to have different types of programs compared to what we underwrite off, which would be Ginnie, FHA, and VA, and Fannie and Freddie. So it's different intricacies on that, but I gotta say, it's nice to have internal underwriter, and we know what our overlays are. If we don't really have any overlays, but if there are any issues with quirky products and non-QM things, and we have to simply go to that investor and ask. Same thing with a mortgage broker. They're going to that wholesale side to ask what they can or cannot do. Good mortgage broker knows what institutions are going to obviously close on that deal. But in our favor, I would say it's easier, it's faster, it's more streamlined, and we do have the ability for wholesale and retail. So pricing is to our favor if we needed to go wholesale, which is great. So those are the differences. The control, as we speak of many times over in damage control, that's the biggest common denominator. And Kashana and I we were speaking about this in Clubhouse. Internal underwriter, and having that underwriter is just a valuable resource. So today, literally, I just got off the phone with her, and complex scenario, we're going to send her that scenario to pre-underwrite, so that way there won't be any 11th hour issues. That's kind of the difference. A mortgage broker doesn't have that luxury to go to the underwriter and say, hey, can we do this? Can we get what's called a TBD, a to be determined, on subject property? We need a pre-underwrite because this is a complex scenario, self-employed, several businesses, 200-page tax returns. Those are the scenarios that you want to present for an underwriter to pre-underwrite that file. So hopefully that explains differences.
It does. I have one more follow-up question to that, or for you to elaborate. You mentioned portfolio. What does that mean? And what about the banks? Do all banks have portfolio products or not? Or explain the difference. So usually it's smaller banks that will have a portfolio versus the big ones, right?
Yeah, so they're basically funded in their own name, and they're making their own restrictions and provisions and overlays. And basically, if they
So what does that mean? Portfolio means what? What does it mean to them as a realtor?
Because as a real estate agent, they're holding that mortgage. Okay, and they're making those rules. So basically, if Regions Bank has here's one. Okay, Veterans United, I believe, has 100%, or USAA, USAA has 100% finance, and they have a quirky program. That program is with them, their portfolio, and so basically they're holding that mortgage note, but that is 100% financing with no mortgage insurance. And that is not just for VAs. Okay, so they have tons of different programs that Fannie and Freddie and financial institutions might not have. Federal depository banks like Wells Fargo, Chase, Bank of America, SunTrust, for example, they've got the doctor program, 100% financing for physicians. So they're holding
right.
that
So
note.
it's like quirky programs that don't fall within FHA, VA
Correct.
conventional guidelines, and that specific bank will hold it. They're not going to sell it. They're going to hold it. They can't sell it, right? Because it's
right.
a portfolio product, which means it goes off the beaten path of the traditional things. Like TD does it for Canadians. So TD does it for Canadians, and then you'll see certain banks will have portfolio for co-ops or 55 and over that are not the traditional things. So that's what a portfolio loan is. So if you it's usually about property type or the type of borrower that you have. All right, so that is the differences there, and I think that's an important distinction, and I think some people are afraid to ask that question, so that's why I wanted kind of to bring it up. All right, so let me pull up the other thing there. So I also want you to speak about the difference between a pre-approval. We went through this before. Don't go 3 hours. I need you to give me the difference between a pre-approval, a conditional approval, a DU, And there's one more letter that is given.
A loan commitment, basically. So, I mean,
Loan commitment.
pre-approval is as good as the words that is written on that paper. You know, a pre-qualification is someone that has not analyzed any documents. Okay, a pre-approval is they've analyzed the documents, pulled credit, and validated. A DU is they've run Desktop Underwriter, Fannie Mae, or whatever system they're using. Okay, they've ran that system, so it's insurable in the secondary markets, and it's an approved eligibility through DU. So different stages. Okay, so when you use the term pre-approval, or your client is asking and saying, hey, I'm pre-approved, and then you look at the letter and you see pre-qualified, loan estimate needed, blah, 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 the fine print on the bottom, that's usually more than likely that it's not pre-approved, or they have not validated documents or pulled credit. Big difference. So pre-approval means they've gathered documents, they've pulled credit, they've issued a pre-approval letter. Typically on the state side where we're at, okay, and most state depositories, they're running either Calyx Point or Encompass, and that populates what's called a desktop underwriter. So that loan officer can, obviously run that for the buyer's agent on behalf of the listing agent asking for that when placing an offer. So it's more ammunition to go in rather than a simple paper that could be misconstrued with assets and a good listing agent is going to want to see a DU. Let's just put it that way.
Okay. So we have a question from the audience that we could answer live. It's from Anna, and it says, in my experience, most of the clients choose their own mortgage broker lender, and they do not accept suggestions. They tend to use their banks like Chase or Bank of America. Any advice on that or comment I should give to them? This is a little off topic, but just really super important. So Anthony, why don't you start with that one?
Look, we just talked about this in Clubhouse. A lot of us don't want to maintain a relationship with someone we really don't know. And what I mean by that is if you've got a buyer and you've got a lender and you've never operated with that lender before, then you're not controlling your destiny, which is your commission at the end. And so you don't know how that person operates. Melinda made a very valid point. If title is ordered past 7 days, she knows that lender's just not on. Okay, it shouldn't take 7 days after an execution of contract. So how do you avoid that? I would simply say per fair lending, you're allowed to shop. Okay, this stigma of my credit score is going to go down. The point of fair lending is you're supposed to shop. Okay, so we encourage everyone to shop and shop for the best interest rate. So how to deflect and diffuse that situation is I've been working with X lender for some time now. Paint a story and educate the borrower on a horror story that might have happened. We talked about this in Clubhouse too. They didn't ask for reserves on the condominium. So hypothetically speaking, if you're approaching a condo, talk about that story and don't scare the client, but educate them and inform them on, look, this is what could happen if we're not using the resources that I've used. However, I can't mandate you use any financial institution. It's against RESPA. But give me the cliff notes. Okay, so if you know that client is shopping with X bank and you say, hey, Anthony or your lender, we've got X opportunity in front of us, can you beat it? We simply run a pricing sheet and we say yes or no. Or yeah, we go up the food chain. If they're not a branch manager, you get a pricing exception to maybe waive lender fees. So now you look like a hero with your buyer and say, look, I told you should have shopped. He beat the rate and we're going to close in record-breaking time. So it makes you look like a hero, but don't do that unless you have a good communication relationship with your lender, because you got to go in guns blazing, not, I don't know where I'm going here. So that's very important. It's easy
my response, and they say, no, I already have my person. It's a bank. I said, okay, so we're going to need them to respond and kind of cooperate throughout the process at different times. Will your lender, will your banker, will your person answer my call or your call at 8 o'clock at night?
Yeah.
That's the key. Say, my people will be there when we need them. And sometimes it's not 9 to 5 during Eastern Standard Time. You know what I mean? So that's also part of the discussion is because the big banks have people all over the country working. The banker usually doesn't touch the file after it's been submitted. So that person that you initially speak to really doesn't have a say in the process. Everybody on the back end is usually on the West Coast. They don't answer until 12 o'clock, noon. They don't start their day, so it really just changes the whole experience. And, there are good mortgage brokers out there, but I have to say, as a default, a direct lender is the smoothest kind of process, just because, because you're not having to go through a middleman to get to the final decision. Okay. So that's that portion. But back to the behind the scenes of the transaction. What I want to bring us back to is basically, okay, you have your intake of the documents. Now we have our contract. That's when you do what's called disclosing, right, Anthony?
Correct. So
that's your first big step, right? Would you say it's your first big step, or would it be doing the loan app, or what comes first?
So execution of contract obviously comes in, and once the contract has been executed, what we do, our process, it's much different than most institutions. I assure you that. I mean, it's proprietary at what I'm doing. But bottom line is that we're taking the intake form, we're executing that contract, we see everything up front, and then we're contacting all parties up front. After that, we're disclosing. Okay, so
what is disclosing?
We're disclosing the loan estimate, okay, and all of the documentation pertaining to the type of program that individual is utilizing, or securing, I should say. So in this case, let's just say, hypothetically speaking, FHA, okay, we're disclosing an FHA loan. We're going to go into all of those disclosures, the loan estimate, and that person is now signing everything on the dotted lines. These are preliminary numbers, obviously, because we still need to order the title request, adjust fees, get insurance quotes. But the process here, obviously, is we're disclosing, we're ordering and rendering services, title, insurance, appraisal, 4506Ts, data verifies, fraud alerts, everything up front. A lot of the institutions might do that in the back end. We tend to do everything up front, costs more money, and you need the staff to do it as well. But all of those services we do up front. So that's the intricacy of how we operate. Normally, someone's going to disclose the next thing, okay? They're going to order the appraisal.
Okay, so let me backtrack then. So when you're disclosing the fees, it's really like the loan related costs, right? And what it costs to close a transaction, right?
Correct.
All right. So that's pretty much the disclosure process. And then from there, once everything is disclosed, is when you move to the appraisal portion, right?
Correct. Yeah.
So the appraisal is ordered by who?
The appraisal is ordered by our junior processor. Typically, it's going to be either an opener or a junior processor or a processor. Okay.
So without getting overly technical, it's the lender that orders the appraisal, right?
Absolutely. And here's and this is going to sound crazy. I know a lot of people are going to be like, man, this is rookie stuff. The inspection is completely different than the appraisal. So I want to make sure that everyone understands that. The inspection should be ordered prior to having the appraisal ordered, because you don't want to order an appraisal and have a can of worms open up if the inspection comes back sour. So obviously inspection first, 4-point inspection, wind mitigation, whatever the case may be, full inspection report, then you guys order the appraisal, which is the lender. Okay.
So the lender, but obviously you can't order into the borrower usually pays for it, right? With a credit card form.
Just had this happen. Yeah, just literally got off the phone, I'd say 30 minutes ago. Electronically goes out, they fill in their application, they fill out their form, their credit card authorization form, they submit it, it goes to the third-party AMC provider, no conflict of interest, and then that's scheduled with that appraiser.
Okay, so to backtrack, sometimes a buyer will hold paying for it for whatever reason, right? Mm-hmm. Their appraisal. So that will stall the ordering of the appraiser. So if you ever, as an agent, hear about this discussion, it's make sure that they pay for that appraisal, because it will stall the scheduling. It will not get scheduled by the appraisal company if it's not paid.
Right.
Just a little note there. Okay, right. I've seen that happen too many times. So. so now, okay, so now you're basically, you're in the juice, you're working your files on your end. So I'm going to talk a little bit about on our end what we're doing. You know, when we get the contract, we are making sure that we actually have a fully effective contract. It's a little bit about how we do it. We make sure there's no initials missing, crunch all the deadlines, due dates, introduce ourselves, and start collecting data that we're going to need for the closing process, right? So so we order all our searches. What are we ordering? We're ordering a title search, a title exam, and we're ordering a city lien search. What is the difference? I get this all the time. The title search searches the county records. These are the things that are recorded with the county or the courthouse, and they have either an instrument number or an oral book and page, and there's a link to the property, legal description, and we also run name searches. That is what our title search brings us. With the results is how we prepare the commitment. The commitment lists all the things that need to be cleared to have clear title prior to closing so that we can close and issue a title insurance policy. The commitment is like our to-do list for title, okay? The lien search is the city lien search. So we don't actually go to the city directly. All closing agents will order from a lien search company. There's like a bunch of them out there. And these lien search companies will go and order from the city, request city lien searches. Also included in there is the utility balances of the utility liens, code violations, and permit searches. So those are all, and then they do a tax search. So those are all the things that come up in a city lien search, and those are all relevant to our transaction. And whatever is the result in there, depending on how the contract is written, with regards to permits or lien searches, will basically be requesting certain things to be done or collecting for things on the closing statement to pay off those debts that are found in the city lien search. Two separate things. The turn times for the city lien search really varies based on the city. So some can take up to 14 business days. So it's super important that these are ordered early and that we order the day you send us the contract. Not everyone, does it in that way because of cost. So they're just, they're afraid to come out of pocket if the deal cancels. So we order up front. Yeah, so we order those up front because we have good relationships with our vendors and they don't charge us if there's a cancellation. So we are able to provide better service for that. So that's a little bit about the differences of the searches. Now, what other things are ordered by a closing agent are surveys and estoppels. So the timing of those are a little later. And the reason why is if you have an incoming contract in February, but we're not closing till March, we can't really use, we don't want to have an estoppel that has only February dates, February figures, and we have to order an update then in March. So depending on the time frame, we will wait the new month to order. Who's responsible for ordering? If there's a seller's attorney in Broward and Dade, the seller's attorney generally will order the estoppel. It's a closing agent's responsibility to get an estoppel. So I've seen this happen. I've had an agent call me. She goes, "Who's responsible for the estoppel?" I said, "Well, that depends on the policy of the company. Some closing agents always order estoppels. Some will ask the attorney if there's an attorney to order it for the seller. But it's your responsibility to communicate that it's your responsibility to order, and then your responsibility as the closing agent to follow up on it. And it's a seller's attorney's responsibility to make sure the closing agent order it or order it if that's the policy. So you just got to have the communication. We document it and we follow up accordingly, depending on, who is ordering it, et cetera. So that's the estoppel. And the same thing with the surveys. A survey is always required when there is a loan. Don't let any lender ever tell your buyer they don't need a survey. They do need a survey because in Florida, to have clear title for a loan policy, you need a survey. And the lender says, "Well, I don't need a survey, but you need clear title. So to get a title policy without exceptions, we need a survey to give that to you." So sometimes they create, especially if they're out of state lenders that are working a little bit of everywhere, or they're newer, they will start to create confusion. It will delay the order of the survey, and sometimes we're pushing it to the limit because of that. Because we always ask for. Well, getting off topic here with the refinance, but with a refi, we don't need a new survey. We can use a prior survey. Sometimes we could use a prior survey in a purchase, but I highly advise against it because you need everyone's approval from it. Then once we get everyone's approval from it, we have to actually have it. And if we actually have it, then we have to make sure there's been no changes and that the seller will sign an affidavit there is no changes. To get through all those, there's usually one thing that won't happen. And if there's a seller's attorney, they almost always will advise them against signing that survey affidavit. And then we have to order a survey anyways, and then we just wasted 2 weeks of a discussion about surveys. So it's my kind of policies, like the best practice is that we use the current ones because we get a new one. Okay?
And your practice is amazing because at the end of the day, those of you that have not used Grimaldi Law Firm, all of that's up front. And I've had many times when I'm not using Grimaldi Law Firm that the surveys ordered at the last minute. And they do that specifically because they want to ensure that they're not, eating that money. That's the bottom line, but it brings mayhem to the closing. It's just, why is this last minute? So it's important that you guys find those relationships that cater to what you're looking for, right?
Yes. And just like how lenders ask for borrowers to prepay their appraisal, we implemented a new policy last year that we're having buyers prepay their surveys with a credit card form, just because it's their buy-in to the process. We need their approval because sometimes they're like, why did you order from this vendor? Can get it cheaper somewhere else or whatever. So we get their approval to order it. They fill out the form and then they order it, and we don't wait till last minute. And this way we know that they're serious about it. And sometimes we see they're not serious about it. Like, no, I want to make sure like this happens or that happens, or I'm not unsettled. So we know, okay, this file is a maybe because there's stuff happening, and they give us more information, insight about the process. All right.
Nice.
So who orders what we order. So at that, hopefully by the first week, all the documents have been collected. Hopefully before you go into the contract, you have all the documents, right, Anthony? But at what stage does an underwriter get involved for you?
So I'm looking at
I know you have in-house versus others. These are good, but let's save these ones to the end because they're about time frames, and I got to pull up, we got to look at the contract.
All right, go ahead. What's the question again?
We'll pull that up.
What?
The question is, at what stage generally does an underwriter come in? I know you guys have one in-house. What's the difference between having an in-house underwriter and other companies that don't have in-house underwriters? And how does that impact the flow?
Generally 30-day contract, loan commitment. To answer that question, it depends what's on the contract, 21 days, 30 days, 7 days. And what's the contingency on that? So typically underwriters should come in, a good underwriter, SLA agreement that we have is typically within several days, no more than several days. So that file should be underwritten. Sometimes I've seen in 3 days of submission and submittal of when the milestones moved, but it depends. You know what I mean? If you've got someone who's milking the clock here on an inspection, and we don't have disclosures signed, so we can't even order, the appraisal, even though that's irrelevant. I mean, you're not going to be able to move the milestone regardless, or you're not going to be able to order an appraisal. The bottom line is that should be in there within typically 7, no more than 10 business days, because you're going to need that submission form to physically have, those conditions to underwrite, and those steps should be, fairly. No more than 5, 4, 3. In some cases, we have a one-touch policy. So we're not having a laundry list of things that we need to go back to the client and say, hey, we need 15 items here.
Right.
It's just the way you operate. See, we control all of that. So it's completely different than a normal world. And in a normal practice, they're going to have within, I'd say, 10 business days, no more. I mean, that's pushing it a lot. I mean, if you really want my humble opinion, I don't think 10 business days would be good, but in any way, it'd be 7 to 10 business days, let's use for an example. And then that approval should be approved within the 11th business day. So you have plenty of time to address all of the other issues that you might have. But typically 10 days, man, done.
So within 10 days, we should have our first layer of response from an underwriter.
First touch. Yes. First touch.
So that means that you submitted all the documents, the underwriter has reviewed the property, reviewed the borrower, and said, okay, this is where we're at, and this is what I need to have this loan clear to close, right? So the conditions are like, these are the things that I need. Now, some things will always be there, like an update or like, oh, you know, where the cash to close is coming from, or that the appraisal has to come at a certain number, right? And then sometimes you're like, oh, I need to see a little bit more information on this bank account or this thing like this. And then that's where the lender will come back to the borrower and say, okay, get me this document, write me this letter, right?
Right. LOX
Now,
for XYZ.
LOX, letter of explanation, right? So some lenders are not that quick. The borrowers will be asked, or some are not very comprehensive in the first submission because they don't have the experience perhaps or the time to review the documents and collect already what they know that is going to be needed. And I'm telling this to agents because we don't always get the pleasure of working with people we want to, right? So with those lenders, like there's going to be like multiple submissions because it's like, oh, this is left. Okay, here's this. Oh, okay, now I need this. And now I need this, because they're not proactively reviewing the file before it's submitted.
So all of this, a good buyer's agent, a good listing agent, and a good loan officer, all of this gets addressed by properly reading the DU, period. Right? That underwriter.
If you get one.
Yeah, exactly. But I mean, the underwriter is underwriting off the DU. All right. And at the end of the day, if they're overstepping conditions, then I would go back as the reference and say, hey, the DU never said this. You know, HUD stating that we don't need this. So properly read your DU, and all of those conditions are in the DU. So if you want to take, you know, be a master of your craft and really take it to the next level, take the time to address all of that as a good loan officer and a good branch. And I know it's a lot of work up front, but all of those items are done. You underwrite all of that up front, pre-process all of that up front. That underwriter is going to look at it and say, wow, this is all done, signed, sealed, and delivered. So maybe you have a one touch at that point, but you're always going to have combative underwriters here and there. I've been through that for a long time until I have my own underwriter now. But I mean, at the end of the day, and no point intended to the company I work with, I'm just saying, you know, you have to build that chemistry and you know each other's idiosyncrasies and things of that nature. Mm-hmm. See if there's a culture that fits with you and that underwriter. But typically, all of it is there in the DU. So if I'm a good buyer's agent, I'm going to review it with my client. And it's very easy. Just read it. And the letters you can write on behalf of what DU's asking. It specifically states. That's a good class. We should probably run some like that. That would be a really good class, actually. We did the CD.
One of the questions, we kind of already had a class about the DUs, but someone asked here, the buyer's agent has access to the DU. How do you get it? Who issues it? So the lender that is processing the loan has it. You should be having a conversation as a buyer's agent with the lender before submitting the offer. If that company does issue DUs, you can ask for it and then submit it with your offer. And it will make your offer look much stronger to the listing agent, especially if they're a strong listing agent, that you have a DU submitted. So you do have access to that, just like a pre-approval.
Yeah, buyer's agent has access to it. Obviously get permission from the client too. I mean, it's a gray area.
Of course.
Go ahead.
So, but it's just, you got to ask for it.
Got to ask for the business, man.
You got to ask for the business, ask for the DU, ask for, you know, whatever questions you have. So, okay. So now we're approaching like 2-3 weeks in. Now we're getting closer to the closing date. During this process, in addition to underwriting the file, they have to underwrite the property. So there's a few ways that happens. They send us a title commitment, which is the title side. So we tell the lender, here's a title commitment. Here are the things we're going to clear. Here are the exceptions. Here, and then a few other, like we give them preliminary fees and they a chain of title and all the things that like they need to clear title and clear the property. And if it's a condo, they will also be requesting certain documents from the HOA, condo association, about budgets and insurances and everything like that. Okay, so those things also need to be cleared up to be able to get the clear to close. So it's like you got to get property approval and borrower approval, basically, is how you look at it. And they're supposed to be happening simultaneously and not one before the other. This way you get to your 30-day close, your 20-day close, hopefully, right? So that's the property approval stage. Now, let's go into the balancing, scheduling, final figures wire. This is where things always get interesting. So if you're not aware, the CD, the closing disclosure, is the closing statement that's used to include all the borrower's figures and the loan details. That's what gets disclosed to the buyer 3 days before closing. Now, this is super, 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 super important for you guys to understand that 90%, maybe 100% sometimes, especially now that all lenders are so busy, those CDs are going out unbalanced. What does unbalanced mean? That means we haven't seen it yet. That means we haven't corrected it yet, because there's certain things that lenders and title do. It's called the balancing act, basically, and we go back and balance our figures with the lender's figures. So what does that mean? I'm going to break it down even further. This is how I explain it to when I'm training somebody new. There's certain figures that we're in charge of, and there's certain figures that they're in charge of. We're the boss of title insurance premiums. We're the boss of recording fees and doc stamps. We're the boss of contractual fees, estoppel related stuff. The lender's in charge of prepaid. The lender's in charge of the escrow ledger. The lender's in charge of the loan fees and related costs to get the loan, right? So they tell us to change our figures to match them for things they're in charge of, and we tell them to fix their figures to match our figures for the stuff we're in charge with. Once we balance like to the penny on every single charge, and our cash to close for the buyer matches exactly, is when we're balanced. So balancing usually doesn't happen to the day before or the day of closing. And we'll get back to that in a second. But in the meantime, that first CD that gets sent out to the borrower for disclosure purposes under the federal law, that that means that the loan fees cannot change, the interest rate cannot change at the closing table. Correct. So if you have a buyer saying, hey, but the closing cost, this looks off, you just gotta review the loan fee. So Anthony does a great job of sending a video with it, saying this is not the final, this is the first draft for you to review, and it has the loan figures that cannot change, the interest rate that cannot change. Is that a good description of what the process is?
Yeah, I mean,
Maybe you want to add something?
We prorated taxes up front, and we did aggregates and all of that. So the bottom line is we used 1.5% of millage rate with the taxes, because the taxes were really low on a $250,000 home. No, actually $450,000 home. So the reason why we did that is we obviously overestimated, because we're not going to be hitting a millage rate of 1.5% on their taxes. And we don't want to spook them and have it hit underwriting, and an underwriter says, hey, look, sorry, the taxes are off. The payment now goes up $200 and your cash to close just increased. So we up front, we are always doing things up front, and we're properly making sure that CD, even though it's preliminary, that CD is usually padded. Okay. And I would say Adam, our ops manager, kudos to him. He's probably 99% accurate. So if a closer will look at that, they would say, man, good job. It's pretty much balanced. And the reason why is we want to make sure, I mean, days of interest, things of that case, you're not going to be on 100%, but there's always having that cushion. And then the expectations, the video that we send out, like Melinda's saying, and she makes phone calls left and right. I mean, with videos, that's educating and informing what's the next milestone in the process for that client. So you're educating them and informing them, hey, look, these are preliminary to acknowledge consent to move forward, just like a CD, is being issued and TRID start in 3 days. So it's really that validation of catering to the process and knowing the process. Even if you're a buyer's agent, you should know the lend-in portion, so you know what's happening. So when that client asks you, hey, maybe you go to a lender that doesn't do all of that. Why are these numbers so different? What's going on? This is a bait and switch. Oh my God, this is crazy. These are the horror stories that you guys are experiencing, unfortunately.
Awesome. All right. So with that being said, then we get closer. So I always get like 4 days before closing, usually. I have, especially with the newer agents or the buyers themselves, because they're not aware. They're like, how much do I need to wire for closing? Yeah. Unfortunately, until we're balanced, I don't have that figure. And depending on the process, we might know that the day before, we might only know that morning. So you need to let your lender, your buyer aware, your borrower aware that you need to be ready to make the wire either the day before or the morning of closing. That's just the nature of the business, because we don't get balanced until then. Otherwise, we are sending estimates, and the estimates are estimates. And then, we could be short, or we could be over. We try to overestimate when we have to do that, and then refund the buyers, but at closing. But that's just the reality. So wires, it set up the expectation that they need to send the wire the day before or the morning of, and we'll know as we approach.
So real quick, and I don't want to go off topic here, but I mean, I definitely want to point this out. A good title company, someone like yourself, balancing of the CD is important to remain internally. I've seen a lot of title companies that add the borrower and the buyer's agent, and there's 40 emails going back and forth on a balancing. I mean, it's a recipe for disaster. So I just want to make it imperative that find a good company that, doesn't do that. And, they're corresponding with the closer and their internal department, and let them do their job. So then when that final CD gets issued, it's one CD. Too much information is going to make the buyer squirrely and ask way too many questions, because it's like watching the chef drop a steak and then put it back on the grill. It's just not something you want to see. So it's things like that, little intricacies that, you guys do very well. So.
Yeah. Okay. Thank you. But so that's the balancing act. That's the request for wires. Now we get to the closing table. Most of the time, lenders don't come to closing. Just, they'll come occasionally when they can and their schedules permit. Scheduling of closing. Now, scheduling of closing is another thing. Like you say, okay, I want to schedule closing at 10 o'clock on tomorrow. Okay, but if we're not balanced, then we don't have the wire request out. If we're not balanced, we don't get a package. If we don't have a package, there's nothing to sign, right? So those are the things you have to understand. Like, so there's like an order in how things happen. So the package comes to us from the lender. It's about 50 to 150, depending on the lender, pages of documents that the borrower has to sign. And then we have about 20 pages that the buyer has to sign on our end. So that gets spit out to us from the system from the lender system, once we're balanced and our cash to close matches. So because balancing happens sometimes the same day as closing, we don't know sometimes how or what time, when we'll be ready to schedule that buyer. So we will always take a preference. We'll put it on the calendar, but it will be tentative until we're balanced. And tentative because we don't want people showing up and waiting all day. We've had, in the early days before I really understood, so we tell it's tentative, don't come until we call you, because then you're just gonna be waiting around, right? And that's just frustrating for people.
Look, buyer's agents need to understand that. I think we should maybe do a cheat sheet on something like that. You can't, and I know that the closing date, and this happens because either the lender's stalling and the closing date is met the same day, or CTC the day prior, and it's a rush job. And I've been there, done that. I get it, but you shouldn't be setting proper or improper expectations with the client by saying, look, we're going to close at 4 p.m. when you might not even have a CTC, if that's the case, or if Melinda or any title company hasn't balanced properly, they don't have a package. And that takes hours sometimes. So you have a client now sitting in a title company waiting, twiddling their thumbs, and you're wondering, this is embarrassing. Oh my God, they're sitting here asking questions. That's because they don't have a package and there's no sign-in. So it's knowing that process and understanding it, because it's important to educate the client on, hey, we shouldn't do this at 4 p.m. Maybe it's a Friday. Maybe now you're going to have a funding issue and no keys are going to be released. So something like that.
We have another question about balancing. Why is it so difficult to match the numbers? It's not a fixed calculation. It's not. Certain figures are fixed based on sale price, et cetera. But every lender's fees are different. Every insurance is based on sale price, so that's going to be adjusted. And it's like it's not an automatic communication. It's two humans sending figures back and forth, and that doesn't happen until it's clear to close. So if the loan is not clear to close, we can't start balancing. And so the loan being clear to close is that everything's been submitted and the underwriter has approved it. And that's when it's clear to close. And once it's clear to close, it gets submitted to the closing department. The closing department has files in queue and they get addressed in the order that they were received, right? So until your file gets assigned a closer, they won't even reach out to us. So then we have to wait for the closer to be assigned. And then once the closer is assigned, they'll send us their preliminary CD and we send them back. It's a couple of emails. The actual balancing act is not what takes long. It's to get to that point is what takes long. Right? Would you agree with that, Anthony?
The closer has multiple files. It's a ticket order. I always use the analogy like you're in Publix in the deli lane. You get your ticket, you get added to the line, you're SOL. So at the end of the day, it's a ticket order and they're dealing with multiple files. So you have to respect that. And they're trying to balance multiple CDs. That's the closer's job. And so without that balance being finalized and approved by both parties, there's no package to be released. If there's no package, you can't sign. So it's interesting, but knowing the back end and the process, is crucial in real estate because those that
that's how you set the right expectations.
Without a doubt, because now it reflects on the buyer's agent and hey, why didn't you tell me this? Blah, 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 because you didn't know the process. You should have known the process.
Or you'll have a buyer saying, hey, I still haven't gotten final figures yet. I called because they haven't balanced. And then you're able, now that you understand the process, you're able to explain, okay, well, once it gets clear to close and it gets signed, it's like a process that it takes. And, this is a normal process of, for the closing is to get assigned a closer and the closer sends the figures to title and then they wrap up their figures that way. So don't get alarmed. If something wrong with your loan, it's just the process that it takes. So I will suggest don't schedule closings for Fridays. Look at the calendar, guys, and don't make it a Friday. Why? Because if we are balancing late in the day, wires don't always clear and we can't fund. Now, not funding on Thursday and funding Friday morning is different than not funding on Friday and having to fund Monday. Parties get much more frustrated about that, but there's nothing that we could do about it. Speaking of funding, though, we have a few minutes left. I do want to talk about the funding process. So everything's signed, right? We must have all originals to be able to fund. They need to be in our control and possession. That's number one. Some lenders require funding approval. Funding approval basically means we send them copies of all the documents, they review them, and they give us authorization to disperse the funds. Awesome. Some lenders send us the funds before and just say, hold it until you get funding authorization. Some lenders don't send the funds at all until they see copies of docs. Not as common, but possible. So that's why I'm saying Friday closings are really tough to deal with because of that.
Break those down, Melinda, because that's so important where you're going right now. So
okay, so not all lenders require funding approval. If we don't require funding approval, I collect all the originals. I go through my checklist. I'm saying we are funded and we release funding to all the parties, so commissions, sellers, payoffs, etc. Release checks and wires, and give the property keys and documents to the buyer. We do the swap. That's when there's no funding approval. When there's funding approval, there's two options. The first is that the lender before closing sends us the wire. So we have the wire already. We have the buyer's wire. We have the lender's wire. They're just waiting to see copies before they give us approval to release their wire. So we scan all the documents, upload it into their system. It's a queue because there's a funding department where they're all in the queue. So even though we scanned it over to them, doesn't mean that they look at it right in that second. So sometimes it takes over an hour to get funding approval just because of that. And then they review the document. They say, oh, you forgot this, or you say, all good, here's your funding approval confirmation. And they send us an email in writing. Once we get that, we swap keys and docs, we swap funds, and we're good to go. And that's we're funded. Last but not least, if some lenders do not send the funds until they give us funding approval. Oh. So in those scenarios, that really delays funding. And it happens sometimes more out of state lenders, like they're not local, it's a little different, but it happens. And in those scenarios, it takes a little longer to get the same process, but then we got to wait for their funds to clear our accounts because we obviously cannot fund a loan or a deal if we don't have all the wires in and cleared. It has to be cleared. That's why we don't accept checks. It has to be a wire, because otherwise checks take up to 14 days. They can be recalled, which is why we can't accept those for closing proceeds. All right. So that's funding approval and dispersing. Now, one more thing. The contract does not require the seller to receive the wire to release keys. All that is required is that I release the funds, so that I send them, that I release checks, that I release the wires from my account. Is all that is needed for us to be funded. I have control of that as the closing agent. The listing agent does not have control of that. The seller's attorney does not have control of that. The seller does not have control of that. Neither do the agent. No one does. I say when we're funded, and once we're funded is when the swap should happen. Some sellers and listing agents get feisty about keys, and like, I only will release keys once my seller
Receives it.
once my seller receives the funds. Show me in the contract where it says that. It doesn't say that, because funding happens once I say so and it's released. So usually we can get over that hurdle, but sometimes it's a last minute scrap because of that.
So this is the reason why we've got people in the closing room and they're waiting hours and hours, because of the three differences of funding, guys. So just to put that out there. So when you are in the closing table and things are taking longer than anticipated, this is the reasoning for it. How do you address that?
And sometimes when they're reviewing it, like there's something that gets triggered. The reviewers are like, oh snap,
yeah,
I forgot something. And the lender's like, oh snap, hold on, we got to look at other things, and they got to make a call or do a verbal VOE that hasn't happened yet, or something last minute with COVID, and all of a sudden now we're waiting 3 hours, you know,
or
and
the
it's because there was
the insurance effective date's wrong. Call the insurance carrier. It's
a
go back to the underwriter to clear it.
It happens.
Awful,
you know, it sucks, but listen, the people who work the files, we're all human. So sometimes a one little date digit can, like, you know, kick it back, and we need someone to sign off on it again. And of course, everything's in order of the ticket number, right? In the order of hierarchy. Of course, if you have an in-house underwriter, I'm sure it's different. You could say, hey, look at this right now, versus waiting for the queue from corporate's underwriting, right? So there's a benefit of having in-house.
Without a doubt, going back to Anna's question, how do you take the client who's already pre-approved with another financial institution? Now you have it. That's the process. We control that process. There's a lot of layers and moving parts to that. Educating that client, saying, look, this is a big deal. It's a big investment, one of the biggest investments they're going to make. But having the intricacies of automation and video content, educating that consumer on each milestone, that's what Melinda and I do very effectively. And like I just wrote down here, insurance, you'd be surprised how many issues with insurance being bound on effective dates that people have. And that's stuff that needs to be addressed up front. But if it's prolonging the situation and effective date's not XYZ closing date, now numbers are off. So it's things like that to know. And then, yes, we're all human, but automating that stuff to make us aware and pinging us like Clubhouse does to say, oh yeah, I better get that. Okay, I forgot that, to attach it to the email. Making your team more efficient as a buyer's agent or as a lender or title company.
All right, so that's wrapping up. So there's more detailed questions about deadlines on title commitments and policies.
Yeah.
So the policy, after closing, we record all the documents. Once documents are recorded, then within 30 days is when we issue our policy. It takes longer to mail them out because we usually do a stack and get a bunch out at a time. But now with COVID, it takes a little longer for certain counties to record, whatever. So it's anywhere between 30 and 60 days. Lenders require them within 30 days. So we try to get them out as soon as we receive them. But there's no deadline for title policies. There's no, there are in the contract, the latest date to receive title commitments. And then what is the latest date to give commitments by title underwriter? That's the same question. I believe there's a 15-day deadline in the contract, on the as-is contract, for the commitment to be issued to the seller, to the buyer. I don't have that number, but if you look in the title section, you'll see that deadline in there, and it can be adjusted accordingly. There is no deadline for the ALTA. The ALTA is issued and signed at closing. Basically, how we do it is we give the borrower CD. We give the borrower their CD to review as soon as it's balanced. We give the seller CD to make sure that their figures are good. And then at closing, they both are signing an ALTA, which has both sides. The ALTA cannot be, a final ALTA is not final until we're balanced, because the figures will change, which is why we don't issue that until the CD is balanced. And then we send the seller CD with the buyer CD beforehand. People will give it, but it won't be final.
Yeah.
You know, so we try not to give things that are not final, because people usually freak out. So if someone really insists, then we send, listen, we'll send it to you, but it's not final. And like, it's super clear in the email, this is not finalized, here's a draft, because otherwise people freak out. Even people in the industry will freak out. Like, listen, this is a draft. Like, don't freak out. It's a draft. It's not balanced. This is just the working copy. What I will say for agents is to always make sure that you're clear on your commissions. If there's a processing fee with the broker, don't wait till the last minute. Don't wait to the closing table to review the closing statement. Ask for it in advance, confirm it in advance, because once you're closed, it's going to be a harder thing to fix. So don't wait to the last minute for that as well. Other than that, that brings us to our final hour. And so we're going to wrap it up for today. I hope that you all enjoyed the show. And if you haven't, some people might have come in later. You'll catch us on replay. We already spoke about the estoppel letter question earlier today, so you can catch it on demand and rewind it to that part. And we hope you guys found this useful. If you have any other questions, please don't hesitate to reach out to us. We have a kick-ass lineup for the rest of the month. We're going to be talking about CRMs. We're going to be talking about being a boss on the phone. We have March Marketing Madness coming up with a bunch of marketing related stuff. It's going to be awesome. And then we have lots of other great topics. So hope to see you guys either here live or on the replay. We appreciate all of you, and look out for some big announcements coming soon. Have an awesome, awesome day.
Thank you.
Bye, guys.